Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Johan Knaust, CEO of K2A, to discuss the Nasdaq Green Equity Designation. Johan, welcome to Trade Talks. It's great to have you with us.
Thank you.
Tell us about K2A and what kind of sustainability targets you have set.
K2A is a Swedish real estate company focusing on long-term ownership and property management of in-house developed rental apartments. The majority of our properties are constructed in timber, the only renewable building material. K2A is active in all parts of the value chain, from the development of housing concepts to customer-focused management of the completed apartments. K2A focuses on sustainability throughout the value chain, and the goal is to become Sweden's first climate-positive real estate company as early as in 2027. This can be compared to the Swedish construction industry as a general, which has the goal to be climate neutral by 2045. So basically, we will be ahead of the rest of the sector by 18 years. We also certify all our newly constructed buildings according to something here called in Sweden, the Nordic Swan Eco Label. And our goal is that all our buildings should have the green certification and also have been screened for climate risks.
And you were one of the very first companies to receive Nasdaq Green Equity Designation last June, and you've showed the way for others to follow. Why is it important for companies to signal their green business strategies towards the investment community?
I think, well, everybody should be working on and talking about their green strategies. This is the only way that we together can solve the climate crisis and avoid the huge risk that the world is facing right now. But even if we disregard our common interest in surviving as species, there are very strong economic incentives to be a green company. I would claim that there's no other criteria that says more about the company's ability to be profitable in the long term than the environmental sustainability. A sustainability company is a future-proof company. Regardless of the industry you're in, consumers as well as lawmakers will increase their expectation as well as their demands when it comes to sustainability. You can choose to adopt now and be a front runner, or you can be forced to adopt later on. And at that time, it will be probably more expensive, and in some cases, it will be even too late. As I was saying, since 2018, we have been certifying all our new construction buildings. And we also, last year, we actually initiated the largest ever eco audit and climate risk assessment here in the Nordics.
And Johan, with the increased focus on ESG, there's a lot of talk about greenwashing. How do you see that getting external reviewer statements helps companies to tackle that problem? And does it help to get external review for transparency?
When it comes to greenwashing, I get really irritated. So I think the answer to your question is yes, it helps extensively to get external reviewers. External reviewers are very helpful for investors to be able to compare one green effort to another. What are the impacts? Are the green efforts part of the company's core business or a side project they do? Only to basically just get some form of green badge. I mean, every company may create one green signature project to brag about. But if you have one climate positive project, while your core business includes 99 other projects, where you're adding CO2 to your atmosphere, is that basically then a sustainable business? Of course it's not. You need to include the entire value chain of the company, which includes scope 3, to be able to say something about the net impact the company has on the environment. And I know it's immensely difficult, and that's why external reviewers and initiatives such as the Nasdaq Green Equity Designation is really, really useful. It's both useful to the market and useful for the planet.
And you're far above the threshold of more than 50% of your company's investments being allocated to activities considered green. How do you motivate your company to strive further with your green business strategies?
That is true. In 2021, K2 had 72% of the revenues and 81% of the investments classified as green. So it's great to be far above the threshold for Nasdaq Green Equity Designation. So maybe you should consider raising the bar. No, seriously, I think Nasdaq Green Equity Designation is a great initiative to be able to separate businesses that really are truly green from businesses who say that they are green. But I would say Nasdaq Green Equity Designation is not the reason we are building a green real estate company. We are doing it because we think it's the right thing to do, both for the climate, but also for our investors. So I would say K2A's ambition is to maintain the historical strong growth of its property portfolio. And as you know, or as I said, we have really ambitious long-term goals. And I believe sustainability is key for us to be prepared for tomorrow's real estate market really.
All right, Johan, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.